So let's talk about where crypto is headed by 2026. We're seeing this massive shift. It's moving past just being about speculation and turning into something much, much bigger, something truly foundational. We're going to explore exactly what that future looks like.
And to kick things off, I want you to think about this question. What if the entire global financial system, the whole shebang, started running on crypto's infrastructure? It sounds like a huge, far-off idea, but honestly, it's happening way faster than you might think.
And that really brings us to the core idea of this whole explainer. Over the next couple of years, crypto is basically graduating. It's moving out of the dorm room of niche, speculative trading and into the boardroom, becoming a fundamental building block for finance as we know it.
Okay, so here's our roadmap. We're going to start with the foundational upgrades that make all of this possible. Then, we'll look at how crypto is building a bridge to the real world, explore the wild new frontier where AI and DeFi are crashing together, and then we'll wrap up by looking at the key assets that are really driving this change.
All right, first up, upgrading the foundation. Because look, before we get to all the exciting flashy applications, the tech itself has to be ready for prime time. This is all about building the bedrock for everything else to come.
The big problem with blockchains like Bitcoin or Ethereum has always been that they can get slow and expensive, kind of like a jammed-up highway at rush hour. So, what's the solution? Well, you build express lanes. In the crypto world, these are called Layer 2 solutions, and they are an absolute game changer for making things faster and cheaper.
And the difference here is just night and day. If you've ever tried to do something on the main Ethereum network when it's busy, you know it can be painfully slow and costly. These Layer 2s that sit right on top of it, they are a massive improvement. This is what you need if you want to handle millions of transactions a day for everything from buying a coffee to settling a stock trade.
And this isn't some far-off theory, by the way. This is happening right now. For Ethereum, you've got giants like Arbitrum and Optimism already handling a huge chunk of the traffic. And what's really interesting is that it's not just an Ethereum thing anymore. Even Bitcoin is getting these kinds of upgrades with projects like Stacks and the Lightning Network. It's unlocking a whole new level of potential for the OG crypto.
But, faster tech alone just isn't going to cut it. The other absolute critical piece of this puzzle is regulation. Big money. We're talking pension funds, huge asset managers. They can't just jump into a market that feels like the Wild West. They need rules. And that's where frameworks like MiCA in Europe come in. They provide a clear rulebook, and that's the green light institutions have been waiting for.
So, we've got faster technology and we've got clearer rules. What happens next? Well, now it's all about connecting this new digital world of crypto with the tangible, physical assets of the real economy.
The magic word here is real-world asset tokenization, or RWA for short. It sounds a little complicated, but the idea is actually super simple and powerful. You take a real thing, like a government bond or a piece of property, and you create a digital token on the blockchain that represents ownership of it. Suddenly, trading and managing these things becomes incredibly efficient.
And if you're wondering if this is really happening, just look at BlackRock. When the world's largest asset manager launches a tokenized fund on a public blockchain, you know a massive shift is underway. This is Wall Street getting its hands dirty, and it sends a huge signal to everyone else.
At the same time, the role of stablecoins is totally exploding. For years, they were basically just poker chips for crypto traders. But now they're becoming this incredible tool for actual businesses, for things like settling international payments in seconds instead of days, or for companies to manage their cash reserves way more efficiently.
Okay, so we've covered the new foundations and the bridge to the real world. Now let's get a little futuristic and look at the real cutting edge, where two of the biggest forces in tech, AI and crypto, are finally starting to meet.
And this convergence is just wow. It opens up these brand new possibilities. Just imagine AI programs that live on a blockchain, that have their own digital wallets, and that can interact with financial apps all by themselves. This isn't science fiction anymore. This is the beginning of totally new automated digital economies.
So how would that actually work? Well, let's break it down. An AI agent could be constantly scanning all the market data on a blockchain. If it spots an opportunity, say a really good lending rate somewhere, it can just go for it. It can execute a trade using a smart contract to capture that value, all without a single human having to click a button. And there are major projects already building this future. You've got BitTensor, which is creating something like a decentralized marketplace for AI computing power. And then there's Fetch.ai, which is focused on building those very autonomous agents that can go out and do useful stuff on chain.
And all this crazy AI innovation is happening at the same time that the rest of decentralized finance, or DeFi, is also growing up. DeFi is moving past its early, kind of wild, experimental days. It's building the solid, robust systems for things like credit and risk management that big institutions need before they'll ever get involved.
We've covered the tech, the applications, and the bleeding-edge trends. Now, let's tie this all together and look at the specific digital assets that are really at the forefront of these changes.
This gives you a really nice snapshot of how the key players fit in. You have Bitcoin really cementing its role as digital gold, mostly thanks to those big institutional ETFs. Ethereum, with all its layer 2s, is becoming the global settlement layer for everything. Solana is carving out a space for super high-speed applications. And hey, as more finance moves onto these public ledgers, the need for privacy, from coins like Zcash and Monero, is probably going to grow too.
And of course, with all this progress, people start talking about price. You see some analysts throwing out some pretty big numbers for Bitcoin and Ethereum by 2026. Now, I have to be crystal clear here. These are purely speculative targets. This is not financial advice. But these numbers do show you the kind of optimism that's building up around the real-world use of these assets.
And that really brings us to the single most important point of this entire conversation. If you remember one thing, let it be this. The story of crypto is changing. It's becoming way less about these crazy speculative price swings and much more about deep, functional, and meaningful integration into the actual global economy. The value is shifting from pure hype to real utility.
And so that leaves us with one final, fascinating question to think about. We're already seeing things like bonds and private credit get tokenized. But as this technology makes it possible to turn almost anything into a liquid, globally tradable token, what's next? Your house? A piece of art? Music royalties? The possibilities are just getting started.